welcome to the next session. Don't do it like Joe, all about family, friends, football, and Forex. And welcome with me today, Jeremy from Australia. Hi, Jeremy. Kinstlinger, how are you? And how are things there?
Thanks. Yeah, very good.
All right.
I can't really talk too much about football, but I can talk about family, friends, and Forex.
Okay, you guys are a lot in cricket and rugby, in Australia.
Yes, everyone else but me.
Okay. The microphone, I can hear you barely. Can you hear me?
1 sec. How's that?
Much better, much better. Okay.
Isn't it weird how you flip it the other way around and suddenly it works well? I don't really get it. It's strange.
Well, I'm definitely not an IT guy. I can't help you. So, sure. Jeremy, here it's early morning. I just woke up, as you may see in my face. You are shortly before going to get your rest.
I've actually got another meeting after this, so the day hasn't just finished just yet. But the kids are all in bed. Hopefully, they don't come down and disturb us. But we'll see how we go.
Okay. Before we start, to inform the audience, this is what we speak today is, of course, no investment advice, and it's purely educational. It's general information about A book, B book, and other things which are of use. And I thank you very much again, Jeremy, for that. I have also opened your YouTube channel and your website. Yeah. And before we start, I just subscribed to your YouTube channel because the reason why I wanted to have you in my show is people talk since 12 years, 15 years, 20 years about A book, B book. It goes on and off. Nothing has changed really in the industry, right? And you made now a new initiative with the A book, B book with your managing director, Angus Walker, and with Sammy Althaus. I watched the series and I'm impressed. It's very good information in my eyes. So, but before we start, Jeremy, how did you get in this wonderful but disputed industry, Forex? How long ago and how did it all start?
It's a good question. So if you look up, let me see if I can do this. If you look behind me, you can't really see the street, but I'm actually living in the same street where my cousin used to live in an apartment. And actually before, this will make sense in a second, but before I got into Forex, I was actually in graphic design, photography, and I had a jeans label. So I was very far removed from the financial world, but Ilan Ben Sion, my cousin, he was really working in Citibank, and he was kind of running like a mini hedge fund out of his apartment attic with a friend of ours, Alex. And I saw him driving in a Mercedes. I'm like, Ilan, what are you doing? What's going on? He said, I'm getting into Forex and I'm trading Forex and we're doing pretty well. So I'm like, can you teach me a few things? And as I'm sure you understand, the journey of a Forex trader takes many twists and turns. And to try and sum it up as quickly as possible, I spent a couple of years learning with him under his tutelage. He was a great mentor. And after a while, I was sitting on different forums and I went from Forex Factory, which we all know about, to another great forum called Steve Hopwood's forum. And just over there, I started learning different strategies from other mentors online like Nanning Bob and a few other guys. And I took their strategies, reverse engineered it, kind of turned it into my own strategies, got a bit of a following, had about 10,000 people that wanted me to trade their accounts. But back then I was kind of learning. And even though I stumbled upon a strategy that I was teaching them, I kind of said, just wait, give me 6 months of good results on a demo. Then I'll go live for 6 months with real money. And then if that works, then we can talk. So look, the strategy worked well in trending markets, but as the market started to range again, I gave all the profits back. So I was about to hang up my boots, and Ilan gave me a buzz as I was coming back from a big Europe trip. And he said, I spoke to one of the guys that run Global Prime, and they basically, this company created Global Prime as a retail arm. And we were trading through Global Prime, one of their only clients, that couldn't really do anything to get it off the ground. So the guy that owned the company basically said to us, why don't you guys take the keys and see what you can do. So we went from being traders into running a brokerage overnight, and you can imagine the stuff we saw from the brokerage side that we'd never seen on the trader side, and I guess the rest is history.
Okay, what year was that you got into Global Prime?
2012.
2012 already. Okay, yeah, I saw your website as well, and it looks very good. Now, with all your experience now, what do you think is the most important for retail clients or people who start trading to know when they start an account with a broker or a bank?
So there's a few angles I can take that. And I'd say even before looking at the brokerage side, trading Forex or trading anything, there's a lot of, there's a really big psychological component that comes along with it. You can give anyone a strategy that works for one person and it won't work for another person because they haven't got their psychology side of things right. So I think a really big part of it, even before you look at the broker side, is to actually see if you can use this as a journey to understand your impulses and get in front of them. Because if you're trading, you kind of got to sit on your hands and not do things that are outside of your strategy, for example. And if you haven't got that psychology component right, then I don't think anyone can make it as a Forex trader or a CFD trader. So I think that's the most important part. But now if you want to talk about the brokerage side of things, then that's something that obviously I'm very passionate about because we run a very different model to the rest of the industry. There's probably only a handful of brokers that run a model that doesn't profit from client losses, which we'll talk about as an A-book model. And you contrast that with a B-book model, which is all about profiling the losing clients into a separate book where you take the other side of the trade. So when they lose that money, you as a broker earn that as profit. So you can imagine there's a big conflict of interest, and I'm sure we'll talk big into what that looks like. But yeah, I think if you're a Forex trader, the first part is to work on yourself is really important. But when you go with a broker, you really want to go with someone that not only you have access to the top guys that are working at that brokerage and the rest of the team where you can get to know them and really understand what they're doing, but they also need to be transparent about their model, because if the broker's on the other side of your trades, on the more nefarious side of things, they can really start to play around with your trades and do dodgy things. We've all heard about the different MT4 kind of back end tools that they can put on to increase latency. That's more on the crazy side of things, but there's just so many different components that come along with the B-book model, and profiting from client losses that are a serious issue, we believe, in the industry, and we're looking to educate people about that. But if your broker's on your side and wants you to win, sounds like that's a really important thing, right?
Yes. So do I understand you correctly? If you start an account, a trading account, and you, with your knowledge what you have now, and you have to choose what is the most important, spreads, commission, customer service, or the execution model, A or B book, which one would you rate like the most important?
I think they're all important. The spreads and the execution that you're getting is extremely important. And that's like the foundation of it. And we're talking just on the broker side of things. Customer support is also important. If you run into problems and you go into a live chat with your broker and there's 30 people in the queue and you can't get through, which we've seen a lot of different bigger brokers, it doesn't really feel like you're more like a number to them. And unless you're able to have that relationship with the broker, and I'm not just talking about the higher ups, our clients can talk to us on a platform called Discord where we interface with them. I don't know if you've seen that yet, but we'll invite you there if you haven't.
Yeah.
It's pretty cool. You need to be able to speak to the customer support and not only get answers that are pertinent to what you're looking for, but also they have to be able to back it up by showing you with transparency features that what they're telling you is the truth. And I'm not sure if you know, but if you go into any broker's live chat, even if they're regulated in a tier 1 jurisdiction, they'll all pretty much say that they don't profit from client losses. And you can keep asking them the same question. Do you B-book? Do you profit from client losses? Do you profile clients into an A and B book? And they'll pretty much all of them will just say, no, we don't do that. We're ECN or SDP or NDD. All these different kind of catchphrases that the industry is now using to imply that they don't profit from client losses, when in reality, you're the exception to the norm if you don't profit from client losses.
Okay, let's talk about the specific topic, A-book versus B-book.
Sure.
I watched your educational videos on your YouTube channel, which I think they are really amazing. And I would suggest every retail trader before opening an account, watch these videos, because I got so much out for myself in addition to what I knew already. So A-book, B-book, and STP or market maker. Is this the same, or could you please, in a few words, describe what is really A-book, B-book, STP, market maker? What is it?
Sure. So look, let's go back to these catchphrases. STP, straight through processing. We like to call it straight to pocket because brokers are using that term as they're not B-booking, but they really are. NDD means no dealing desk. ECN means electronic communication network. And even retail clients, if you look at how they respond to a broker when they ask them the question. They say, "Are you ECN?" But they actually don't know what they're really even asking for. And even the definition of ECN is ambiguous. Everyone can have a different definition. So, like I said before, these are kind of catchphrases that brokers use to imply that they don't B-book with profit from client losses. When we talk about market makers or ECN or STP, to me, the topic that's really at hand is, does the broker profit from client losses? Forget the catchphrases, forget what they're using as terms. It's very simple. Do you profit from client losses or not? And that is the A book versus the B book. A broker that doesn't profit from client losses doesn't profile losing clients into a separate book and internalize those trades. They'll look to either send all the trades out at once, or they'll do non-discriminatory batch hedging, which is basically taking the other side of the trade, but once your exposure reaches a certain limit, then you exhaust that into the market. Might be a bit of complex information for someone that's new to this, but the series really unpacks that. So yeah, I think to me, the real topic of conversation is talking about brokers that profit from client losses, which is all the B book.
Okay. What is your experience with the regulators? It seems so easy to make it obligatory that a broker or bank should put on the first page, we are profiting on client losses and we don't profit on client losses. It seems so easy. Why? What's your experience on that?
It's a very awkward conversation as a broker to go to your client and say, we profit from your losses, because it implies a bunch of different things. And like I said, that series really unpacks it, and I can go into some of the different details. But the regulators around the world have given brokers permission to run this kind of model. So even if it's unethical and unfair and all these different ideas that we talk about, either way, the brokers have been given permission to do this by the regulators. So for them, even if they're doing the wrong thing, they kind of have in the back of their minds, oh, I'm doing the right thing because the regulators allow me to do that. The regulators at the moment, they're talking about leverage and access to markets and things like that, but they're not really, we feel anyway, that they're missing a big picture about this profiting from client losses. Because if you even just remove all the different things that we talk about and simply ask yourself the question, what would the industry, that's now 10 to 20 years old, how would it look like if this model was never allowed? All the brokers that were out there would be fighting to have the most profitable clients, and that would be the yardstick of measure. But instead, no one's talking about what we're talking about. And even the stuff that we'll talk about over here, no one's going to get from anywhere, because everyone's kind of in cahoots on this. And it's really interesting. Even retail clients that are watching our videos, they'll still come and say, well, we don't care trading at a B book. If I'm profitable, what does it matter? But that's the kind of topics that we unpack in the series. And I think we're 3 episodes in now, and we're looking to do 10 different episodes just in this A versus B series. So there's a lot to talk about. And if someone actually has the time to go through it and watch it all, they'll really learn a lot. I mean, even when we're filming these videos, I'm learning so much. So yeah.
I agree. And I watched the first 2, and I will watch the other 8 coming, cool. Because it's not easy to do a video broadcast now in 20 minutes or 25 and get all the information across. You guys are the basically specialist on each field. You are the co-founder. Angus is the managing director with also a lot of experience. He was with IC Markets, I learned. And Sammy seems to be a very passionate head of customer service.
Yeah, he's really good.
Yes, and I think he is also very critical. I feel that through the screen, and he would not agree to any bullshit going on in the back of the scene. Now, Jeremy, question: Global Prime runs purely an A book. You can confirm that?
Correct.
Okay, so you have a price aggregator, I guess, where you have connected different liquidity providers.
Yeah, we have about 25 different LPs or liquidity providers that price in. They're made up of tier 1 banks, non-banks, other market makers as well. And they kind of fight to be the best price that is sitting at the top of the book. So in case anyone doesn't really understand how it works, we aggregate all the different prices from these different liquidity providers, and whichever one of them is showing the best price, that's the price. The best price gets streamed to the clients, and they can then go and hit that price.
Do they also, the clients, do they also see the amount available for that price, like the top of book price? Oh yeah.
So in MT4, have you used MT4 before?
Yes.
So MT4 has really got the market share of the retail crowd. Through MT4, you can't really show depth of market to the extent that you can in another platform that we offer, which is Trader Evolution. And inside Trader Evolution, even if you don't place trades, you could have that sitting next to your MT4 platform and see the full depth of market where all the different LPs are pricing in. Now, what you can also see is after the fact from inside the client portal, the clients can click on any of their trades in real time. So as soon as you close your trade, you can go to your portal and click on that trade, and it brings up a trade receipt. And what that does is it actually shows you the depth at the time where all the different banks and liquidity providers are pricing in, including their names. And then you can also see 5 seconds before and 5 seconds after a tick chart of where all the different LPs prices were before and after your trade. So you can kind of see where you were filled according to where the market was at the time.
That's
and
incredible.
Of course, you can also see which bankers price your trade.
So that means when, let's say, client A, retail trader, has closed his trade with one lot euro dollar, he gets afterwards automatically a trade receipt where the trade got executed?
Correct. And I'll give you an example, because people have this common misconception that the liquidity provider on the other side is the B-book. But that's not really how it works, because the B-book means that the broker gets to see where their clients are positioned. Where's my hand? There it is. Get to see where the clients are positioned. They earn the entire profit of or loss, well, depending on, if they make a loss or a profit, depending on what the clients made on the individual trade. Whereas liquidity providers, you could have BNP Paribas fill the open of the trade, and then Nomura fill the close of the trade. So that means that BNP didn't make that full amount on the trade. Plus, they don't get to see where the clients are positioned, because we send them one tag, which is the whole retail flow, and they can't individually target different clients. Whereas a broker that can see where a client's are positioned can stop hunt them and who knows what else.
Incredible. Super. Now look, Jeremy, a question. From let's say just to say a number, you have 100,000 clients, let's say, and they are all different positioned in different instruments. When you send these trades like directly through the liquidity providers, what information does the liquidity provider get? Does he get information what margin level this client is on? Does he get information where his stop loss is placed, take profit, any information?
Nothing. All they see is one tag, which is global prime retail. So they're seeing all these hundreds of thousands of trades come through. All they see is that it's coming through from the stream that we've designated called Global Prime Retail, where all those clients are sitting inside. They don't get to see anything else.
Wow.
We don't share that information with them. The only real conversation that we have with our LPs is all based around their rejection rates, their fill rates, and their speed of execution. And we hold them to a very high standard, where if they're not meeting, 95, I believe we're at 95% fill rate, and execution times below certain amounts, depending on the pair, we cut that LP and we say, look, we'll get another one on board. We've got 25 different LPs. If you can't compete according with how all the other LPs are competing, then you're going to get cut.
So B-book broker make money on the losses of the client. It's direct revenue in their pocket. Yeah.
Yeah.
And you make money on spreads, commission, and swaps.
Correct. So a B-book broker, it's really interesting, because when a B-book broker, when you internalize a trade, you actually earn the entire spread at the time. Whereas with us, first of all, a lot of our pairs were actually completely raw, like the majors are all completely raw. But certain pairs do have markups. It's all disclosed. So everything that we're talking about here is all disclosed on our website, how you make money, where the markups are, everything. So a B-book broker will actually earn that full spread, including any markups that they have on it, because they've taken the other side. Also, the swaps, we have counterparties that we owe money to for interest for positions that our clients are holding overnight with our counterparties. So we've got to pay that out to the prime broker and to the LPs. Whereas the B-book broker, actually, if they wanted to, they could set 0 swaps and you could trade for free all day. So that's a full money maker for them. Another thing as well is with a B-book broker, if an account goes negative, the B-book broker doesn't owe that negative balance to any other counterparty, because they've internalized the trade and there's no one else really in there. It's all, kind of fake liquidity. So with us, if an account goes negative, we actually owe that to the prime broker and to liquidity providers, which is another one of the reasons why we can't offer high leverage. So if you're seeing a broker offer 1 to 500 leverage, there's pretty much no way that they're running an A-book model, because you're not going to take that kind of risk. The higher leverage you give to clients, the more likely they're going to blow up. And you can imagine that's why retail brokers love to give clients high leverage, because it means there's more chance of the client blowing up, which means more chance of them putting more money into their pocket of the client's losses.
Okay, so basically, it seems like a perfect model to me. I mean, very rare in the industry. Do you know by chance how many brokers worldwide or in Australia, percentage-wise, run a pure A-book, or like you, or do you know any numbers on that?
So it's very hard to tell. The only real way to know for fact if your broker is doing this A-book model is if they can show you post-trade transparency showing which liquidity provider filled your trade. Without that, and no broker's ever going to lie that flat out. Like, you'd never be crazy enough to go and give your clients access to that information if you're making it up, because all it takes is one scenario where you've lied and it goes to the regulator and you're finished. So no broker's doing that, because the only way, if you do offer that as a B-book broker, there's only one person on the other side of the trade. If you're on the B-book, it's the broker. So they can't really show you that. So in terms of actually knowing for fact who is an A-book broker, it's very hard for me to say that there are any, because none of them are really showing this post-trade transparency. The only broker I can think of is JFD. I know they showed it a lot on their websites in the past. I can't really see any mention of it anymore. But again, I believe their solution is more they cut and paste from different systems, not automated.
Okay. Well, on this occasion, we also need to say it happened in the past, like FXCM, you may have heard in 2014 or 15, they claimed for themselves that they were basically a book model, and then they had actually a separate entity, which was, you heard about that, I guess, which were basically, FXCM said they were a-booking, and that was apparently true. But one of the liquidity provider who fed into the A-book model was basically doing a B-book sharing with FXCM. How do you avoid this discussion coming up, like in regard global prime? Like in theory, you could actually have a good friend from 20 years ago, and he opens a liquidity shop and he feeds into your model. Yeah.
100%. So look, if you go and have a look at liquidity providers, and again, it's totally disclosed on the trade receipts, you can go and see who's pricing over there. These aren't just like random different companies that you've never heard of. You're talking like XTX, which is a big market maker. But from what I understand, they don't go and give kickbacks to brokers. I don't believe you can go and make an arrangement with them. With FXCM's model, it was really they were running a B-book for them and kicking them back, from what I understand. You do hear about payment for flow, where you go to an LP and say, we're going to give you this flow, you can do whatever you want with it, but give us back $1 per million. We don't have any of those relationships. And yeah, it's really interesting. I think that, they're all tier 1 banks behind there and non-bank market makers that everyone knows about. And at the end of the day, a broker could be lying about this stuff, and you really never know until it's too late. And I think one of the most important things is to be transparent as much as you can with your clients and have that relationship with them, where if any of this stuff comes out at any point in time, it's not like it has to go through the courts and this and that. This Discord that I'm going to show you, there's about 5,000 or maybe 6,000 clients that are sitting in there that have joined over time, and they're all sitting there discussing global prime alongside us. So you can imagine all it takes is one scenario where we've lied or done the wrong thing, and we're going to get absolutely toasted in front of all our clients. So yeah.
No, surely, and I follow you now since recent very intensively. There's no doubt from my side, but I just wanted to mention it because the industry finds quick loopholes. As we know, when regulators decide maximum leverage in Australia is now 30 or 50, okay, they open then a brokerage offshore somewhere and still continue with 1 and 500. That's because brokers are very innovative on that front. Another question since 2012, I think CFD trading is banned in the US. It is highly regulated now in Europe through the ESMA, and the Australian regulators followed almost the ESMA rules. And now it's one of the requirements is to publish the winner-loser ratio on the website, in Europe at least. And it's for B-book brokers in average, it's about 80% losing clients to 20% winning clients by quarter. Do you have in your company, in your brokerage, numbers, estimates how big the winner-loser ratio is?
Yeah. So look, most brokers sit between say 75 to 90% in terms of losing clients, and we're sitting around the 60% mark. It obviously changes a lot in months, like during there you got a bit of a shock there,
Yes,
a bit of a difference.
yes.
You know, it changes a lot during months like COVID, where a lot of retail participants will be caught offside in big volatile moves. That's enough to send I think most traders astray. When the markets suddenly move in a big fashion, you cut your positions or your stop losses get hit because there's a lot of volatility. In times like that, it can definitely, you know, rise a little bit more, but usually around the 60% mark. And, you know, if I'm being totally honest, I'm not 100% sure if that's because the clients that choose Global Prime are more profitable traders that know how to find a broker. We're kind of like, you know, we fly under the radar. We don't go and shout from the rooftops what we do. Marketing's never really been our strong point. So all we can really do is talk about, you know, the industry and where we differ from other people and kind of showcase how we're different. But at the end of the day, I think from our perspective, we want to try and see what we can do and what we can achieve and what we can put together to make clients more profitable and bring that ratio down even more in the client's favor. But at the same time, a lot of different avenues that you can take. You know, there's signal services, which isn't really something that we want to go down. For us, we really want to educate clients about, you know, liquidity, how it all works, the back end. And also we've got a feature that we have at the moment called mentors, which we kind of like a one step removed from it, where we don't take any fees for it, but our clients sit in the Discord and we have different demo competitions and live competitions. And the guys that do really well over there, you'll find that the other retail clients are asking if they can mentor them. So we set up another Discord and we basically said, if anyone wants to mentor the clients, then we'll put it to a vote. The community votes them in. And yeah, we've got a couple of pretty good mentors teaching people, you know, their style of trading. And I don't think you can go and make anybody profitable. It goes back to the psychology side of things. If you don't have that component, then you'll never have it. So yeah, the real big question is what can we do? What features can we put in place to make sure that they're giving them the best shot at being profitable?
Jeremy, what I really like in the whole approach is just this fact that a book broker should usually have a genuine interest that the clients make money, because then they are longer alive and produce longer commission. So basically, that is already a very good reason to join you guys, like as an ebook broker. Also, I'm in this industry also quite long already.
I want to hear your story.
That's
maybe I have to watch your other videos. Maybe I have to interview you on another one.
Exactly. Yeah. I'm happy to fly to Australia to do it in person. Yeah.
Let's go.
By the way, yeah, I spent 2% of my lifetime in Australia, so I love this place. Yeah.
Amazing.
Yes. Now long in that industry, and as I did a bit of research on you, Global Prime, I found almost only positive reviews, and I found an old website which I haven't visited for 2 years, Forex Peace Army.
Oh yeah, #1 rated broker there. You know, above 300 reviews, or even if you look at above, because you can have like a broker that has 5-10 reviews that are all 5 stars and they'll be at the top. But if you filter by brokers that have say more than 50 or 100 reviews, I can't remember exactly what it is, we're pretty much #1 over there.
Yes, and that gave me already, because I know this website 2008 or before, you know, and it has always been a website. Some like it, some not. Most of the time, the people like it who have positive reviews, and the other one they hate it, you know. But it's still a good measure of client satisfaction, and that is why I also like the whole concept of you, because it seems really you have a very high client happiness factor in your Global Prime. So, have you watched any of my other videos? Don't do it like Joe.
Sure, I haven't yet, but I intend to. I wanted to kind of meet you first, and I wanted to be like, I like that surprise element when I'm meeting someone for a video like this. And I was going to look at it at the beginning, but I was like, you know what, let's just take it easy. Also, it's been an interesting few days. My bird passed away recently. Not my wife, that sounds like my wife, my pet bird. But I've had him since I was 13, so he's 24 years old. And yeah, he passed away in my hands the other day. So I've been a bit off, but yeah, anyway, random tidbits.
My condolence wishes to that.
Thanks. He's gone to a
And
happy place, I hope.
I love animals. I have myself a big dog around, and I know how that. Yeah, you don't want to get in these situations. Now, I, I was in that industry for a very long time, and now I took a bit of a time out, and I'm doing video broadcasts, educational, with very interesting people. And I think it's worth if you visit also my.
Huh? That's why you chose
yes,
me.
Yes, absolutely. You know, well deserved, Jeremy, because I really like your model. Now, if you want to open a branch here in Switzerland, give me a call. You know,
let's do it. What, you keen?
Huh?
You keen?
Yeah, I love your model.
You heard it here first, everybody.
I love your model.
Well, from what I understand, you've got a bit of background working in brokerages for many years, and it seems like you understand, the complexities that come along with it. And from what I see, the people that you're interviewing, you're choosing the right people that bring a different angle to the conversation. And yeah, I'm more than happy to have the chat afterwards. So hit us up.
I try to work on the education, because I think you and me, we know the educational aspect has maybe not been put on highest priority the last 12 or 15 years. So that's one thing. Now, it's also good to maybe visit my channel. I have different types of speakers, also from, I had Javier Justo, you know him from the one MRB, MDB scandal, maybe not. Okay, just, no worries. Now, always.
If you were to choose one person that I have to see, who would it be from your interviews? Apart from you, of course.
All of them. All of them.
Amazing.
No, I learned from every speaker something. Yeah. And on purpose, as I founded this blog, the initial idea comes from Jack Ma, the founder of Alibaba. Sure. He once stated that people learn more from failures than from success. And that's why always the last iconic questions are to my guest speaker. When you would think back, Jeremy, what would be your event? Don't do it like Jeremy, where you say, this is a good advice for the audience, where you could say, you can learn from me.
It's interesting what you say. It's like maybe there's too many to choose from, and they're probably like a lot of them I couldn't even say on camera because I was a bit of a bad boy growing up. But one thing I've definitely learned is that no matter what, as long as you're looking to build yourself up and become the best version of yourself and constantly evolving what you do, and like we said before, looking at your impulses specifically, because I think that's where your subconscious is going and working and doing things in front of you. If you can jump in front of that, it's a big thing. And even if I look at things that could be considered failures, even ex-girlfriends over the years, I learned something from each of them that led me to my wife, who's beautiful and breaks my balls all the time. So amazing, she really lifts me up. But yeah, you learn from everything. And even on the trading side, maybe that's a good example. When I first started trading and I had all these followers, and it all seemed like I'd cracked the code, and I'm really glad that I took it easy and I wasn't like, yeah, give me your money kind of thing, because it didn't work out in the end. But you know what? I was really passionate about it, and it led me to where I am now, running a beautiful, successful brokerage with teammates that I've hand selected alongside my partners that are family, and I get to hang out with clients all day. And now I'm learning how to trade 10 years on. I'm still learning from them. It's a never-ending pursuit. So any failure that you have, as long as you learn from it, and it's okay to repeat it every now and then, but at some point you got to jump in front of yourself and be like, what am I doing over here? You learn from it, you move on, and maybe is that a good answer? I don't know. You tell me.
Yes, I think it is. Failure, always gets you to the next level.
Sure.
And of course, I try to teach my kids, don't try to do the same thing again. But yeah, very good. Thank you very much, Jeremy. So please send my regards to Angus and
Sammy.
And Sammy. Because I will follow each version they do, and with you, because I really love it. So all the best for your future enterprises, and thanks for joining again, Jeremy.
Thank you very much. I really appreciate it. And yeah, if you ever want to seriously chat about the Swiss arm, you know where to find me, yeah?
Okay, thanks a lot. Yeah, I'll come to Sydney. Okay, bye-bye.
All the best. Bye-bye.
Thank you, Jeremy. Bye.
See you later. Bye.